Welcome back. Now we're at a really interesting juncture in 10-year yields. And I know I don't talk about fixed income markets that much, but given the changing environment, I'm going to be. And so I want to take a look at the charts with you. Today's Wednesday, May 18th, 2022. Now, important reminder before we look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So you may or may not own a home or have a loan out and really pay much attention to interest rates, but they affect every part of our lives and our economies. No matter what country you're in, the interest rates that are going on in the US markets are going to trickle out and affect you. So it's really important to pay attention to what we call the 10-year here in the States. Now, we specifically mean the 10-year Treasury note interest rate. And so this is the rate that is being paid out to holders of 10-year US bonds, okay? Now, the ticker symbol in TradeStation is $TNX.X, and you can see the quotes of the interest rates on the side. Now, in order to read these properly, you need to move the decimal point over to the left one space. So currently right now it's showing 28.86. That's really 2.88% or 2.89% if you want to round out. Okay, with that framework in mind, let's take a quick tour of the history of the 10-year because I really want to focus on what is actionable right now that I just noticed on the charts. So here you have the monthly chart, all right? And the monthly chart shows that we have been rallying, recovering on the yield chart, so falling on bonds, since the pandemic started in March of 2020. Now you can see most recently, this week's candlestick has returned to the peak. Again, this is yield, so it's really the inverse of what's happening on bonds. So when I use air quotes for price and lows and things like that, you'll understand why. But we've traded into the peak from October of 2018. So we're finally in that range of that price spike. Okay, you can see it right here. So I'm going to leave that annotation on my charts. I'm going to change it to blue because I'm very much into color coding and I like blue for resistance. Now we're going to take this over to a weekly chart. So I'm simply going to change my chart time frame and head down to weekly chart. Now in the weekly chart, you can see transposing that same weekly price spike, and I teach price spikes in my 4 zones RSI system. It's one of my favorite ways of discovering support and resistance. You can see now in the RSI power zones in the weekly chart that we have pushed up and just like kissed, just touched the bull resistance power zone. Check it out, guys. The last time the 10-year was in the bull resistance power zone, it had a sizable move lower. So it definitely retraced here, and you can see that was for a few months. So we may be on the verge of that. We have to see again, we're in a different environment now with rising interest rates, with the Fed making its first hike in a very long time. But the charts are fact. They are traded data. They don't get estimated or revised like earnings and things do. So what the charts are telling me, I'm going to take very seriously. So looking at the recent candlestick patterns, so if you're into candlesticks, I highly recommend my Gann candlesticks course. It's really cool because it takes my unique twist on looking at nano levels in candles and teaches you how to study them more in depth. So I'm going to do a quick calculation and I'll be back here. All right, so I did a really quick calculation on a Gann candle nano level, and you can see it as this solid blue horizontal line. So let's just really zoom in on that. That level is an important resistance within the candlestick, and you can see that we've actually come and just tested it this week, but now we're backing off. Now, it's a Wednesday, so the weekly candle that you see forming here is only 3/5 of the way done if you want to get technical. So that's what we're going to go look at in the daily chart. But based on the prior bar's action, the candlestick pattern that's there, which I also detail in Gann candlesticks, and the actual nano level, this is not looking good for the 10-year right now. Meaning I'm expecting the yield chart to roll over to the downside a bit. How far down? Now we go to the daily chart for some more detail. All right, so here's the daily chart. Still, I'm going to give you back perspective from the last summer low, right? That had that several months of correction after the weekly RSI power zones hit the overbought chart or the overbought resistance zone. Okay, now look at where we are. You can see on a daily time frame that today's candlestick came and touched that 29.92, so 2.99 level, and is backing off. So here's where things stand. We're the yield chart currently is, I expect it to at least come down to 2.78. Now again, how I pull those levels is tied to one of my favorite ways to discover support and resistance that I teach in RSI 4 zones, which is the best way to get started with my education if you haven't already. And if we push below 2782, I'm going to do some quick calculations to be back with you about what other supports, again, it's not really support, it's just lower levels here on the chart that I see, because this would translate to bonds trading higher. So I'll be back in a second. All right, here we have it. So you can see a vertical line I've added in. This vertical purple line is for May 24th, and that's actually the forecast that is the time and price components together, time meeting price, that I see for the yields to weaken into. So I'm basically saying that over the next week or so, I expect to see continued weakness. Now, of course, we need the actual chart action to confirm this, but that's what the forecast is suggesting. And you know what? That would fall in line with the RSI power zones on this yield chart coming back and re-entering the bull support power zone. Now, notice if you look back at the history of the RSI power zones on the daily chart, there are some repeating patterns of RSI power zones behavior. I talk about this in the first lessons I have in my advanced RSI power zone system. It is a great course for you to get into if you've been using the RSI power zones for a while and you're ready to get to the next level. It will help you see even more on this chart than what I'm showing you. So with that insight of the RSI power zones and the advanced concepts with forecasting, which I teach in loss forecasting, if we push below 2.78, here's the next major support areas. 2.50 to 2.43, okay, that's a zone of support. That's actually a really important one. And if we see continued weakness below there, which I think is unlikely, but hey, could happen, then the next important support, big picture, over the next coming months is 2.06. So the best way to stay on top of what I'm seeing in between me updating you on this now and perhaps again in a few months is to join me in the HEMA Ready tribe. Join one of my courses, because then you'll be invited to monthly group coaching. And I hold these sessions, and I have an advanced version and I have a beginners all levels version, and we meet once a month, and it's a really valuable time where you get to come ask your questions and I answer them right on the spot. So we're going to check in on TNX.X again next week in advanced monthly group coaching, regular monthly group coaching live a couple of weeks after that, and we'll keep an eye on it again in these crazy environments in the market and the economy. So I hope that was helpful. Remember to subscribe, like, comment down below, and follow, and I'll catch you next time. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.